Alright guys, welcome back to another video. Today we're going to talk about how do I decide which trades I should take next. So the previous videos we talk about how to basically do or perform our technical analysis. How do we mark up our charts from finding the trend lines to finding the area of interest to deciding or analyzing the price action. Is price bullish? Is price bearish? And now we're going to decide, now we're going to show you how to decide which trades we should take next. Now, it all starts with everything that I did before. So you have to mark up your charts. You have to know where your area of interest is, where your trend line is. For me, I grade trades. So I give trades A, B, or C. A, of course, is the best possible trade, the highest probability trade. B is an okay trade, but it's not the best. It's less likely to work out in my favor. And C is, I consider C to be more like trades that are counter trend trades. They can be high probability, but they're counter trend. And I never like trading against the trend because at any time, price will change on you and go back to the trend that it was supposed to be in. So you might just get a little pullback with that counter trend and then just continue upwards. And that's because price spends most of its time in the correct trend rather than going against the trend. So that's why I don't like taking counter trend trades. So counter trend trades get a C grade. So when I trade, I look for an A trade, an A grade trade. And an A grade trade for me is a trade that is basically bordered by a trend line and an area of interest. So ideally, I would want to take a trade in this area. Not here. We're all there. Well, there's not even a trend line here. There's a minor area of interest, but there's no trend line. So being in an area of interest only isn't good enough. Being at a trend line only isn't good enough. Has to be in an area where those two things come together. So that's one part of it. So I go through my list of all the possible pairs, and I look for pairs where price is currently or close to an area where there is a trend line and an area of interest coming together. So that's the first thing. Then I want to see what price is doing. Is price bullish? Is price bearish? And what is the probability that it will continue in that direction versus changing direction? So let's take this for instance. This price was bullish. It's in an area where there's a trend line and there's an area of interest. It was bullish here. What's the probability that price is going to change direction? Well, because we've already said before, when you have a trend line cross-secting or coming together with an area of interest, you're likely to get a change of direction at that point. So there is a high probability that price is going to change direction in this area. And so what you want is you want price to give you signs that it's going to change direction. And three things have to happen. The trend that it was previously following in that direction has to be broken. If it's going to be a sell, then price has to form a lower high and then a lower low. If it's going to be a buy, then price has to do the opposite. It has to be above that trend line and above that area of interest. And it has to form a higher high and then conform it by creating a higher low, right? So let's focus on this. So I would have been looking at this price action by the time it got into this area, and I would have been waiting and waiting. The C price would have formed a higher high, then it would have formed a low that was lower than this previous low. But this would not have been the place to enter the trade. Why? Because there's a trend line here and it hasn't broken that trend line. So even though it's created a lower low, giving a signal that's going to change direction, there's no confirmation because it hasn't broken this trend line. So it formed the lower low, but it kept on moving because of that trend line, because it's now going to buy off of that trend line. So it continues, it goes higher, but it doesn't break the previous high. So it creates a lower high, already created a lower low, creates a lower high. Finally, it breaks that trend line. So now what you have a lower low, a lower high, and a break of the trend line. So those three things are telling me no. All right, price is changing direction. Price is likely going to sell lower. So this here is basically your confirmation that price has changed direction. Now you don't want to enter the trade here, because if you enter the trade here, your stop loss will have to be above that lower high. And so you're going to have to wait this entire duration for your price to get to your take profit if you do a 1 to 2 risk to reward. Ideally now what I would want price to retest this area, reject the area, meaning that either it rejects the area of interest or it doesn't create, it doesn't, oh, it does not create another high. So you want price basically to stay under this area and then continue moving downward. Once that happens, that's when you can enter the trade. And so that's how I choose my trades. Quick, simple. The hardest part is after you found your strategy, or some person call it an edge, the hardest thing now is to sit and to wait for what you need to happen. And then when it does, you execute. And it's as simple as that. Once you understand how the markets move, once you understand how to analyze a chart, the hardest part becomes a battle within yourself to fight this desire to just be in a trade, to fight the boredom, to just sit and wait and let price do everything exactly the way you want and need it to do before you enter that trade. I hope this was helpful, and I see you guys on the next trade. Before I go, I want you guys to like and maybe leave a comment if there's anything that you need to clarify, and subscribe to the channel. And I'll see you on the next video.